Hi there, welcome to Grain TV. It's Friday, March 18th, a mixed day and a quiet day in the grain market. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, corn off 1 cent a bushel, beans off 2 1/4, and Chicago wheat recovering from yesterday's loss by only gaining 1/4 cent a bushel. News today was pretty light in grains. There was some outside movement to sort of correct from the last few days of activity. The U.S. dollar found at least a temporary bottom today after a 2-day slide thanks to the Federal Reserve announcement. So we were up about 0.2% on the U.S. dollar. The crude oil market was also weaker after rallying for the last 2 days. And so, that pretty much set the stage as end of day or end of week correction was just kind of the norm. The other news that we continue to sort of monitor are the situations in Brazil. And in particular, at the start of the week, we had the Brazilian real coming off of its 8% gain last week. And part of that reaction at the start of the week was the expectations that De Silva would actually not face corruption charges because he was going to be appointed to a cabinet position by the current Brazilian president. But by the middle of the week, that seemed to be tossed out as some protests and things like that led to a change of De Silva getting appointed. So there now is a broader expectation that the current Brazilian president and other associated legislators with that regime will be tossed out. And that has Brazil hoping for a better economy, and the Brazilian real turned around in the last 2 days as a result. So overall, in the last 2 weeks, the Brazilian real is up better than 8%. And that is positive for the U.S. because it's making Brazilians' export situation much more expensive at a time of the year when they should be hitting the world market. Let's turn our attention now to some long-range forecasts. We talked about the plains yesterday, and let's turn our attention now to what the Weather Channel has released for their temperature forecast for June through August. And what they show is what other meteorologists have been talking about is the potential for a very warm summer situation in that June to August window, especially in the upper Midwest, starting in Iowa and moving north. Now, this doesn't say anything about moisture, which is going to be critical for the crop, but at a minimum, it does point to the potential for a hot summer, which could lead to some sparks in the grain market if the moisture isn't there and the temperatures are excessively hot. Switching gears now, let's talk about the cash market. And unfortunately, the cash market has been dead on arrival all year long. And in particular, I want you to focus on that green line for the U.S. corn basis this year. The blue line for 2015. That is what the U.S. corn basis has been doing since November 1st. And what you can see that it's basically been flatlined really for the last 3.5 months. It has not moved more than 2 cents a bushel on average across the U.S. That is in sharp contrast to other years where we at least see some trends of higher basis. In 2013 crop year, we did actually see a weakening basis, but that was largely a result of a big rise in the futures market in that time period, which led to active farmers selling. So this year we've had very flat basis. We've had the futures market that's been fairly flat as well. I'm not sure that we have much downside left here in basis, although there is still talk of a lot of stockpiles out there. So, it's anyone's guess, but overall this is a market on the cash side that shows little upside potential, but probably also little downside potential. Let's talk now about the corn market in the futures. And in May, we were looking at that 365.5 mark as where we gapped open to start the week. We came down to 366 today before closing a little bit above that. Thanks to some late activity in the last 30 minutes of trade. So we did maintain that 365.5 gap. Watch for that next week. Watch for that open on Sunday night at 7 p.m. Central Time to see where we trade. We had a really lackluster trade today. Thursday was pretty lackluster. So we've been holding steady to slightly lower in corn, and it'll be interesting to see if we do push up to those 373, at least that intermediate resistance above us at 373. I think that's sort of the short term we're looking for to see if we'll get any more short covering. After the close today, we will get some CFTC numbers on the short positions by managed money. That'll be interesting as we come into Sunday to see if those shorts are very large. We might see a continuation of what we saw last Sunday, which was a bump up in the corn market. So watch Twitter at Grain TV. We'll be tweeting those numbers when they come out. Have a good weekend, and we'll see you on Monday. Grain Hedge is pleased to announce a new tool called Technical Alerts. Technical Alerts is free to our trading clients and delivered by email first thing in the morning every trading day. Technical Alerts is a powerful, easy-to-use system that provides quality trading opportunities. Each trading opportunity shows a chart and analysis, providing clear price targets and risk potential to allow you to make an educated trading decision. The commodities covered include grains, livestock, crude oil, currencies, bonds, and metals. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. Let's take a look at how to interpret a technical alert. At the top, you will see a red or green indicator arrow which signifies the market's likely move. Red shows when weaker prices are expected, and green for when higher prices are expected. The summary section shows the expected price target and the expected duration it should take to reach the target. Also, Technical Alerts provides both support and resistance to help you identify key levels on the price chart. Underlying support is where technicians believe there is a level of buying interest, while overhead resistance is the price level thought to trigger more active selling. The support is marked with the letter A on the corresponding price chart, and resistance is marked with the letter B. Below the chart, you will see the data interval of the bars. For example, a 1-hour data interval means the chart pattern was constructed from a 1-hour bar chart. And when you are using the Grain Hedge trading platform, you can use the pull down on your chart to change the bar interval to the appropriate time period. As always, we strive to provide you the best tools to improve your trading and hedging activity. If you have any questions on how to use Technical Alerts, please contact us at 877-472-4607 or by email at support@grainhedge.com.